Another new change to mortgage rules. I know, it seems like lately every other week we're hearing of some type of change to mortgages here in Ontario. And I can imagine how keeping up with these changes can be confusing for future home buyers. I myself am having a hard time keeping up. And that is why in this video, I'm going to go over the most recent changes to mortgage rules in Ontario. And more importantly, determine if these changes will actually help first-time buyers become homeowners. Hi there and welcome. For those of you that don't know me, I'm Sonia Ramgobin, a realtor with RE/MAX Rural Properties servicing the Durham Region and GTA. Now, before we get started, I just want to clarify, many of you already know I'm not a mortgage expert, but as a real estate agent, I always make an effort to stay on top of the latest news and information that can impact buyers, sellers, and renters. And I make it my goal to share that information with you. So I hope that the information I'm going to share with you today will be helpful. As always, I recommend speaking to a qualified mortgage advisor before making any specific decisions. With that being said, let's break down these mortgage changes and see how they will impact buyers. So the announcement was made that the federal government has raised the cap for insured mortgages from $1 million to $1.5 million. And they've also extended the maximum amortization period from 25 years to now 30 years for insured mortgages. These changes are set to take effect as of December 15th, 2024. So what does this all mean? Well, first, let's go over the raised capped amount. So as I mentioned, the cap for insured mortgages has increased to $1.5 million. This means if you're trying to qualify for a mortgage with a lending institute and your down payment on a home will be less than 20%, you can now qualify for a mortgage on a home priced up to $1.5 million. So this new rule allows buyers to expand their home search to a higher price bracket, which is supposed to give potential buyers more options to choose from. So basically, the reason the government is making this change to the cap amount is because in cities like Toronto, home prices have become extremely high and $1 million doesn't go as far as it used to. So by increasing the mortgage cap, they are trying to make home ownership more accessible for people. Now let's go over the extended amortization. So in August, it was announced that first-time buyers would be eligible for 30-year amortization on insured mortgages only if they purchase new build homes. So I guess the government realized that there were too many limitations to this rule and it wouldn't benefit many people. So they decided to expand the eligibility criteria. So now they have decided that as of December 15th, those that can qualify for the 30-year amortization on insured mortgages are: 1, first-time buyers purchasing any type of home. So that can be new built or pre-owned. And 2, all buyers only purchasing new build homes. So by adjusting the rules on who is eligible for the 30-year amortization on insured mortgages, they're hoping it will now benefit more people. Their main goal for this extended amortization is to help lower monthly payments for buyers by spreading them out over a longer period of time. In other words, making their monthly mortgage payments more manageable for buyers. Now that we've gone over all the proposed changes to come, the big question is, will these changes actually help buyers? Well, based on what I've read and heard, there are some mixed reviews. Many mortgage experts are in favor of the mortgage cap increase to $1.5 million because this change is now a better reflection of the current home prices and will now give buyers more options to choose from. These experts go on to say that these new rules open up the door to home ownership for many who were previously priced out of their markets. So for example, buyers will now be able to purchase a $1.5 million home with a down payment of $125,000 compared to the current $300,000 requirement they would currently need without this new rule. So even though $125,000 is still a substantial amount to save, it's more attainable. On the other hand, there are some mortgage experts that are not in favor of the extended amortization. They believe while it reduces monthly payments, it ultimately increases the total cost of home ownership. Some experts believe that this is actually a band-aid solution to the current housing affordability crisis, and instead it has been suggested that removing the stress test overall would be a more helpful and effective approach at helping buyers get into the housing market. Overall, both sides bring up valid points. In my opinion, deciding if these changes will benefit you or not is based on everyone's unique circumstance. For example, if you're already in the market for a home and struggling with affordability, these changes could give you more options and flexibility. However, buying a home is a long-term commitment, and while lower monthly payments should be appealing, it's important to be mindful of how much extra interest you'll be paying in the long run. So it's a matter of weighing out the options and seeing what would work best for you. I mentioned earlier, it is best to speak with a qualified mortgage advisor to help you determine what best options to take based on your unique circumstance. Well, I hope this video was helpful at outlining the upcoming mortgage changes. I'd love to hear your thoughts. Do you agree with these new mortgage rules? Feel free to comment below and let me know your thoughts. Thank you so much for watching, and I'll see you in the next video.